were waiting on rates to go down, who waited on the sideline, and now we're like, wait a second, that didn't really happen. Did I miss my chance to gain equity? Now I'm in a more competitive market, and they're starting to dive in.
Welcome back, ladies and gentlemen, to the most listened to podcast in the Naval Academy community. I have no idea if that's true. My name is Katie Green, class of 15, here with my esteemed and much better looking co-host, Joffrey Whiteside. Joffrey is our Norfolk goat, and we have the distinct pleasure of interviewing our Jacksonville, Florida goat who crushes it for the Naval Academy community, Julianne Grant Johnson.
Hello, thanks for having me.
And we just learned of a new stat that Julianne closed the number 4 by loan volume, right? Or amount in Jacksonville VA loans. I said that, I butchered the whole stat.
Yes.
Out of 13,000 agents in Jacksonville, Julianne came in number 4, which is sweet. And honestly, the people above you are like, they shouldn't be included.
We don't count. We don't have to count them. It's fine.
Yellow and red pin stuff. It's like when people are like, wow, this loan officer at Navy Fed closed something. I'm like, okay, that's a little
Right.
Well, that's awesome. Julianne, thanks for carving out some time. What are you seeing in Jacksonville as of late as we approach the holidays in real estate?
So many different things, but I would say the most noteworthy thing that I am seeing is people who were waiting on rates to go down, who waited on the sideline, and now we're like, wait a second, that didn't really happen. Did I miss my chance to gain equity? Now I'm in a more competitive market, and they're starting to dive in. And it's actually the first year since, I started my real estate career that I'm having a very busy holiday season.
Really?
So I'm really thinking that it is because of the people who sat on the sideline.
Oh, wow.
Yeah.
So what are they communicating to you? The number one thing they were waiting on is just, we want to wait on interest rates to drop. Is that?
People get caught up in the media. I see that a lot. I see a lot of parents have input over their kids. If they're reading it or hearing it in the media, they're telling them don't buy, the rates are going to go down. And the reality is that didn't happen. And I don't think that that's what you should base your decisions off of. But that is, for the most part, why people were waiting.
Let's have a real discussion here. So let's say, in the beginning of 2025, if rates do go down and, just Jacksonville has a lot of Navy people and we're heading into PCS season, think about how competitive that will be. And the thing is, you can always go back and refinance after, so much time and things like that. But I've been in the market, 2020 COVID, where we had to deal with 20 offers and buyers had to go $30K over asking and guarantee, $20K in appraisal guarantees. So tactically speaking, I think it's better to kind of buy in a higher rate environment if you know that interest rates are going to drop in the future, in my opinion. What do you think, JD?
Yeah, I think you said that perfectly. I'm pulling up. So let's just say, the average Naval Academy buyer is like a 01 or an 02.
Mm-hmm.
So let's put a purchase price of like 405. I'm using my system here. Let's put 405,000 as the purchase price. Let's put 0% down. And let's just use some nominal rate today of like 6.25. And we'll just use principal and interest because tax and insurance are, they're always hard to predict. So it's 6.25, VA loan 0% down, purchase price 405. Let's do first time use VA loan. Principal and interest is about $24.93 a month. Okay.
Mm-hmm.
Let's say most people are like, you almost need to ask them, what would you consider like a rate drop? Like what are you?
I would say that wasn't even much different. And this is from a completely outside point of view, pretend I have no knowledge of real estate rates, things like that. When I bought my first house, it was my first real estate transaction as a realtor also. So literally no knowledge. it was 300,000, and that was my monthly payment at a 3% rate. So, I mean, which pick your poison is kind of what I say to people. It's never going to be easy. There is nothing, that simple about it. You're going to either have a super competitive market and pay way over, or you're going to have a higher interest rate. At least those are the two sides of the coin I've seen. I personally would rather have the higher rate than buy something that's not worth it. It kind of takes me back to like my finance roots of why would I overpay for something?
Yeah, which is the other thing that's probably going to happen in 25. So like, let's say rates drop from this, in this example, from 400 for a $400,000 purchase from 6.25 to 599. Like, let's say that's the magic number, which psychologically may be the perfect number for people, is just being back in the fives.
Yeah.
It falls from 24.93 to 24.25. So $68 a month, which at least in the Cameen house, we spend that at Starbucks every 2 weeks. So it's like sometimes quantifying that for people is really important, because like, are you going to lose a house over $68 a month? Everyone is like, no, I thought it would be so much more than that. And sometimes you just have to like remind people, like, we're talking about like a family of five that's going to Chick-fil-A one time a month for a house. It's
easily
pretty easy trade, Anyway, sorry to digress, but
yeah, I think it's the same on the investing side. It's like people get so caught up on like the interest rate, but in reality, if you can make the numbers work with a higher interest rate, like I said before, it's bound to drop. So that average deal where you're getting average cash flow can turn into a home run if rates drop down to a 5.5. So it's one of those things you got to take into consideration. I have a question, Jules. What are you seeing in Florida with insurance? Blake, who we interviewed 2 weeks ago, he kind of brought it up. And I know, like, where there's a will, there's a way, right? People are still buying real estate in Florida. It's still good investments. So can you touch a little bit on that?
So I actually have this question in all of my buyer consults. Everybody asks me this question, especially if they're coming from out of state. It's like someone is in their ear telling them they have to ask me about insurance.
Yeah, you see it in the news. I want the ground truth. I want the ground truth. You see a lot of misinformation.
So I have never had a contract fall through because of insurance. We have always been able to get insurance. That being said, there are things I look out for as the realtor and that I would recommend looking out for. So in Florida, we have the 4-point home inspection, which now, thankfully, most inspectors include in their general pricing. But that's going to be your plumbing, electrical, roof, HVAC. And that form is going to go to the insurance provider, very similar to how the WDO form goes to the lender. So we're looking for those 4 points to basically pass the inspection. If they don't, there are ways around it, right? You can get a specific insurance provider. There are people, but it will change your premium. So those 4 points are the things that we're really looking for to make sure that you optimize your insurance premium.
Makes sense.
Is it like, I know Citizens is like the state-backed or crowd-funded, or what is it? There's like
so you
Citizens.
can get Citizens insurance. I've never not been able to get Citizens insurance. It just may not be the price you want. So we will use that 4-point to our advantage in repair negotiations, very similar to how I handle the WDO, where I'm like, fix this or we're not moving forward, because it's not going to work financing wise. It's not going to work insurance wise if those things aren't fixed. There are some things that,
as like a negotiation tactic.
Yeah,
that's actually
So if it comes back that something is outdated or super old and we didn't know about it, which happens a lot, especially I think we have the biggest historic district in the state of Florida. So we have some really beautiful old homes. People love those. New academy grads love the old homes because they're walkable. But we're going to have insurance problems there. So we're going to use that to our benefit when negotiating.
That's like us in Pensacola. We gravitated right towards the historic district. It was walkable to downtown. Sometimes it comes with some like, for us, the neighborhood had some, still needed to grow into like security and stuff like that. But
this is a good topic. This is a
yeah,
good topic. What's like the real difference between a home that was built in like 2000s and the older homes, like as far as things to expect? What have you guys seen?
that's a great question. In Florida, all of the properties we own, I think, were built before 1885 or something. So, like, the thing that we loved about it is that they stood out on Airbnb because they were very unique compared to other, Florida style houses. So we loved that. But the biggest things, and I'm sure it's different in Jacksonville, so I'd love Julianne's opinion, is like the insulation has never been updated, and so there just isn't insulation. And so our utility bill, we got this like it was a grand house. It wasn't very expensive, but like all of a sudden I started looking at our utility bills, and luckily we had Airbnbs functioning too. So that was sort of making the data a little skewed because people at Airbnbs just like crank it, like.
Yeah.
But insulation has been a big ongoing thing for us, and it's a dual problem because when you have lack of insulation, you've got a lot of condensation. So we just had to install a bunch of house-wide humidifiers, which aren't the ones you plug in. It's like the commercial units that you put in the attic, and those were, $10,000 each. And so with that, you have mold problems. But Julianne's, it's probably different in Jackson. I'm sure the East Coast is different.
I mean, same thing. I went straight to like windows. So same concept though on the energy efficiency. I have the conversations a lot on both ends because I sell a lot of new construction also. It's a very stress-free move-in, right? You get your warranties, things like that. We can negotiate a warranty on one of the old homes though, so that's always possible. But your utility bill will be a lot different. So I'm in my second new construction home, and that was a pro to us, was like, we like our house on 68 degrees. Like we like to be freezing cold all the time. We have energy efficient windows, things like that. If we were in a really old home, we may have to put in new windows, do something like that. But at the end of the day, people who are buying those historic homes, they love the historic homes, and that typically does not stop them.
Sort of like the classic car people, like it's more aesthetic, I think, and like the walkability is pretty great. Joffrey, where's the historic districts that you guys like will tour or walk through up in Virginia? It's Portsmouth has got some like historic parts, right? Or where are they?
Portsmouth has historic parts. The main one everybody talks about is like Ghent and Norfolk. Super accessible, walkable streets. The big thing in my eyes with all the older properties, typically speaking, you want to kind of plan more for like maintenance issues. So you know how in a normal investment property, you might plan for like 5% of repairs of the rental income you receive. Well, in the older properties, you kind of want to bump that up to, it depends what's been replaced, right? So you want to bump it up to, I say like 8%. Whenever I buy a house in the, beginning of the 1900s or built in the beginning of the 1900s, that's kind of what I plan in when I buy houses like that. Vice versa, the older homes are typically a little less expensive. So if you buy a newer home, there's going to be a premium to that. You're going to be paying, that price. But on the flip side, you're not going to have as many repairs and things like that. So that's kind of what I look at. There's no right or wrong answer. I think it's just a personal preference at the end of the day.
I think I've learned I'm an undisciplined historic house owner, and I think that you can be disciplined, but like there's always something to fix, and I always say yes, and it's not the best way to do things. And what was one of the other things? The cool part about in Florida, a lot of them will have some like shared zoning things, and sometimes they'll like sort of edge into like historic business districts, and sometimes it makes like Airbnb easier, or like turning it into a duplex is easier because like in the 70s it was a duplex at one point,
right?
And so you can do some like creative things in there too, which is pretty cool.
A lot of ADUs, like a lot of the additional dwelling units here. So a lot of like mother-in-law suites, an extra Airbnb in the back, something like that.
Julian, did everybody in Jacksonville breathe a huge sigh of relief when hurricane season officially ended, because I feel like this year was active. Every day I was waking up to like new hurricane.
It was, but you know, it goes back to the people in Florida just don't care.
Yeah.
I think you and I together had three closings in the middle of those hurricanes. And those poor buyers who were not from Florida were so stressed out about their homes. And we just had to constantly be like, it's going to be okay. You're going to be fine. The most damage we
Almost,
went through was my transaction coordinator's car had like a tree fall on it. So
oh, yeah,
that was
forgot
it.
about that.
But yes, it was the first time that I've seen people leave Jacksonville since I've lived here.
Oh, wow. Yeah, I mean, some of the bigger storms got a lot of national attention to warrant
Yes.
leaving Florida, I think. So when do you like start shifting your well, you're already shifting your mindset to 2025, but like are there signs during the holiday season that like okay, 2025 is upon us for real estate, or like we're going to start positioning our team for new 2025 goals, or like the market's already changing because people are going to make it a New Year's resolution to own a house? Like, how do you prepare for the start of all that?
So I try to think 90 days out, and this really shifted for me when I think it was April. I had a really big month. It was a record-setting month for me. And I was meeting with my broker, and he said, "Well, what were you doing 90 days ago?" Because
Hmm.
that's what led to this. And
That's a
that's
good
really
business
how I
lesson.
look at things now. What?
That's
That's
a
a great,
good
yeah, that's
business
good
lesson.
advice.
Yeah,
And
the
that's
work you put in right now doesn't really show up until, 90 days
right.
from now. So I think people get so focused on, what results am I getting now, but what they really should be focused on is the day-to-day
Yeah,
activities.
that's really good
I'm already
advice.
like thinking what I'm doing now in my business is really February. And it
Yeah.
goes
Oh,
the same with closings. Think about the average contract is 30 days. You don't pay your mortgage right away. So these are the conversations that I have all the time, especially with buyers, because they get stressed out that they're going to close, take on this new mortgage payment. They don't want it until next year. I'm like, you're not even going to pay your first mortgage. If we close today, you're not even paying until February.
yeah.
Yeah,
So,
that's some great advice. If you're looking to buy a house in the beginning of the year, you should honestly start like reaching out to if you're moving to Jacksonville, reach out to Jules. You should start reaching out now to kind of like prepare for that because it's kind
Right.
of like it's a 3 months process to be honest with you, from getting pre-approved to actually looking at houses to actually like closing. So that's solid.
And also like some of the weird things at the end of the year is a lot of just administrative delays, like waiting for your W-2s to hit so that you can qualify for a mortgage. And like companies never tell you when they're going to release their W-2s. So like it could be January 11th, it could be the end of January. And so like a lot of that can cause delays too, especially like if you're commission based. So like, if you guys are doing real estate investing and you're a commission based W-2, like you have to have a W-2. And if it doesn't publish till January, then you're probably closing in February.
Yeah, absolutely.
Which
What
is are you seeing a shift towards multiple offer situations as 2025 starts, or have you guys been seeing that for a while?
yeah, so with the multiple offers here, I definitely see it. I see it when homes are marketed well, when they're priced well, when the seller has hired a really good listing agent who does a good job marketing it, and they want to be competitive, there will be multiple offers. We are still seeing that lag of people who feel like they missed that seller's market, who are overpricing and they sit on the market. But we are definitely seeing multiple offers on the well priced marketed homes.
Wow. Joffrey, what about you?
Um, as far as Norfolk is a little bit different in the surrounding areas, right? Our inventory is still fairly low here, so we are seeing multiple offers. But in my opinion, I don't know what you think, Jules. I think between honestly like November to like end of January is like the best time to buy a house as far as competitiveness. Everybody's, gone for the holidays. Not everybody's out shopping and stuff like that. That's not to say you can't, you shouldn't buy other times because real estate you should buy and hold over a long period of time. But from what I've seen as an investor and helping a lot of people is the best time is the holidays. To be honest with you.
I completely agree with that. It's some advice that I gave to, I have some buyers who moved here and they're in an Airbnb, which is very stressful to me to live the day-to-day life in an Airbnb. And
Oh man.
they were worried about the holidays being competitive and so many people traveling in to look at houses. And I said, it's actually really the opposite. You're going to be at a more advantageous position. It's a super interesting time. I also think it's worth noting, I don't know if your clients are like this, Joffrey, where they like to analyze everything, sometimes get a little bit stuck in that analysis paralysis, but you have more time to do that over the holidays if you're in a less competitive market.
I blame all Group 1 majors for that. The analysis paralysis, only Group 1 majors.
Hey,
Maybe I'm just
not too much on Group 1, man.
No, yeah, come on. Group 3 is like, we're not analyzing this. So you guys are also entrepreneurs, and a lot of realtors listen to this podcast too. So what are some things that worked in 2025 from like a social media perspective? Because I got to think a lot of clients find you on social media. So like, what's working?
I really count on my team to tell me what to do on social media because I am not funny. I am like 0% funny. But I do find that funny content people like. I just am not a super funny person. I always stand by that like organic content in business is the best way to do things. It's how I started my team. It's how I nurture my clients, my sphere of influence. It's really how I try to do social media, being authentic and being myself. That always ultimately yields the best results.
What about you, Joffrey?
Yeah, I think, being yourself and providing good information or entertaining, right? Those are like the two categories, which if you follow the USNA Property Network page, we do a little bit of both. So shameless plug right there.
There's a lot of entertaining going on there. This year's actually been super cool. The amount of midshipmen we've been able to interact with, which if I could go back and be a mid and see what life could be like as a youngish grad, it would probably be equal parts motivating, but also make me less scared of what the future looks like. Because like it can be a very normal life, even though you're going through military stuff and you can still have a family if you want one. You can still invest in real estate. But Joffrey, I'm really excited about this. Is I was talking to Julianne last week, and at the summit, there's a mix of people that come. And let's say of the 400 or 300 or 400 people have come, some are ardent, I don't know if that's the right word, real estate investors. Like, I'm going to do this. I'm going to rip through. I'm going to buy a house a year. But other people in the crowd are more like me when I was graduating, where I got married after graduation. Like I couldn't do that, really. That point of my life was going to be very brief, where we were going to be able to buy a house and move. And so Julianne's going to talk a little bit about that, because she is in a similar situation to my wife Liza and I, where she was married with her husband, they had kids, and it's like you really can't bounce around the houses, so you got to do it other ways or when you're younger, stuff like that. Julianne, any thoughts on that?
And my husband and I have this conversation to this day where we're like, we want to invest in real estate. We think it's important to be growing our portfolio, doing things like that. But we were never in a position to like house hack. While I love house hacking and support so many of my clients doing it, we were not going to have someone live with us at the beginning of our marriage.
That's perfect.
The other ways to grow, long-term generational wealth through real estate investing while still having a family, starting young, which is pretty common in the military world. I also wanted to know, you said how intimidating the world can be knowing you're going into like this active duty military position. I find that we live in such a bubble where we think that our day-to-day life is so normal, having kids by myself, super normal. Like husband traveling all the time, deployed in a war zone, super normal, not stressful at all. And then I talk to civilians and they're like, this is crazy. How are you doing this? How are you buying houses? I'm like, this is our life. And I just love that we have this community to talk about it in.
Totally, because it's so abnormal. Yeah, Julianne wasn't house hacking when she was younger, married to DJ. She was house training DJ, because like you still have to house train a Naval Academy grad, right? They're not the greatest roommates. There's a lot of like laundry learning and cooking skill learning and cleaning up after yourself that mostly comes with time. Liza took like 6 months just dedicated to like house breaking me because I had so many bad habits, especially after TBS. Like I went and lived in the woods for like 6 months. It was even worse. I was a terrible roommate.
Yeah.
All right. What are you most excited about for this summit? This is our third summit. Both of you will be speaking. So what are you most excited about? It's going to be on March 1st, which we learned because croquet is moving forward. But what are you most excited about this year? I think it'll be our highest population density of firsties, which is so super cool. 100 are registered already. But yeah, what are you guys excited about?
I'm excited about like the networking. Like you said, not everybody's going to be, a big real estate investor, but the networking that goes on and the people that you talk to will more than likely be like your business partners like later on in life. I think that's the power of it. I think me and JD have seen it time and time when we interview people. Like Eric and Truss, they became business partners later in life. They own 3 restaurants. So I think that's the power of it. Getting people together and just networking. Like business deals might not happen right there, but you're building relationships over time. And to me, that's invaluable. Jules, how
I was
about you?
going to say almost the exact same thing. I love meeting people. I was thinking while I was getting ready for this, I'd always feel so honored to sit, at the table with all of the people that I get to, all of these professionals with different expertise and words of wisdom. And it's just always awesome to meet other people who are enthusiastic about real estate, want to learn about real estate, can share their experience and knowledge about real estate. I'm just really, really excited to see some familiar faces, but also some new faces.
Yeah, that's really well said. Like Daly this year, Henry Russell's able to come again, which is awesome from RFC Capital. Samir's coming. I think he's going to be the keynote speaker. I could listen to him talk for 30 hours straight.
Yes.
Well, awesome. Well, any other saved rounds as we probably, this might be one of our last ones for 2024.
Yeah, I got a couple of questions from some mids that, hit me up in my DM. They asked me, what are the biggest risks in buying, a property or investing in real estate, and how can I, mitigate those risks as a beginner?
I think there's obvious financial risk. Like if you get in over your head or you get in a renovation and you don't have the cash to complete a project or something like that. But I think there's a lot more risk in just inaction, not doing anything. Yeah. Like let's say you lose, I don't even know what the worst case scenario from all of 2024 would be from all of the different deals we did. Let's say someone lost on paper, because most of the time they're not even realized losses. Let's say equity went down or like appreciation went down. You lost $5,000, $10,000. Okay. Like you have a stable income for the next 20 years if you want it, where you're going to be making 6 figures. Yeah. You paid money essentially to learn a real world lesson that I would have, needed to learn that if I was going to make real estate investing a serious priority of mine. So I don't know. I think there's like this weird belief that like I'm going to lose everything if I make a mistake buying real estate. But in the vast majority of cases, you're buying a single family residence with unbelievable guidance around you, and Julianne and Joffrey, that have seen a lot of structured deals before, and that de-risks it a ton. I think if you do something stupid, like you paint your house like flamingo pink and you put you're going to cost yourself some money. But
what about you, Jules?
So, whenever I have clients who are extremely risk averse, because I do have some buyers come to me and that is their major concern. They're not trying to have a huge return on investment. They just don't want to lose. Well, at least in Jacksonville, there's not much losing. All of the numbers show that year over year, you're going to have a greater than 8% return, better than the stock market. But the advice that I give to them is let's try to hold the property at least for 2 or 3 years. If you're that worried about, a loss, markets are cyclical. It will come back. If it goes down over 1 year, that's life. That's how financial markets are. So I say try and hold the property for at least 2 or 3 years. Most people want to hold them and rent them and build their portfolio. Not everyone does. So in that scenario, I say let's hold it as long as we can, allow the property to appreciate. And it will appreciate. Even if you simply maintain the home, it will appreciate and ultimately give you a good return.
Yeah, like Joffrey, I'm sure one of the properties you own has decreased in value on paper as you've owned it. Like you got more doors than like the Door Factory and Monsters Inc. I'm like, so what do you do?
Love the reference.
So like,
Yeah, I would say I don't think I've ever told this story, but the first house I bought a townhouse where the HOA was like $500, right? I made money off of it because I house hacked, whatever. But when I sold it, I actually lost money because I was just trying to get out of it. So the first house that I purchased, I legit lost $4,000 to be honest with you. I had to pay to get rid of it. But at the end of the day, it was a learning experience, and I didn't let that deter me. And I bought more houses, and it worked out pretty well for me. So
what's that townhouse worth now?
It's not worth. It's not worth that much. If I would have held on to it for 3 to 5 years, I would have came out on top. But I sold it in 2 years, and it's kind of hard to profit unless you were in the middle of a global pandemic or something like that. So the best thing to do, even if you can't sell it for a profit, you can rent it out, right? And even if you are losing $100 to $200 a month, you're still getting that principal pay down. More than likely, the property's increasing in value. So it's more of a long-term game, to be honest with you. So that's what I always tell people. It's the long game. And maybe I couldn't see it, when I was that young. But I mean, a $500 HOA with a pool the size of, my bathtub, I was just not having it. It was ridiculous. So I sold that one at a loss. So.
Yeah, but
I love this advice. I love the advice because I have sellers come to me and they're ready to sell their home. They've only owned it for 2 years. And I typically, as much as I would love to list the home, right, as a realtor and get that listing and sell it, my advice is typically let's at least rent it for a few more years, let it appreciate more. Then you can profit on both ends. It's definitely a long game.
And then there's also the opportunity cost, Joffrey, of you holding that property and not investing in other things that were profitable too. So okay, you sold it $4,000. That's one paycheck in the Navy.
It is. And I made a lot of money off that property. Don't get me wrong. So
that's
net wise, house hacking wise, I made plenty of money, but I did sell it at a loss. So
might have helped taxes.
Absolutely. I got one more question from Amid. What mistakes have you made in real estate, and what would you do to learn from it?
Oh, today? A lot already, or overall?
Overall.
We bought a lot in downtown Pensacola, just a land lot. And I had no idea what I was doing. I was living in San Diego. The real estate group we worked with was phenomenal. They've become some of our great friends. I love them. But I just simply, as the buyer, didn't really know what I was doing. We had this grand plan of developing and putting these little Airbnbs on there. I had no idea about zoning rules, and I didn't know you couldn't do that because it wasn't zoned properly for that. And we didn't have the capital after we did the engineering plans to even pull something like that off. So we sold it at a $1,200 loss, this piece of land. But it was a really good learning experience. And there was 2 reasons why it was a bad decision, because it also weighed down our debt to income ratio for our primary house purchase, because it was just sitting on our credit report, $3,000 a month, just negating probably $300,000 of buying power for our mortgage. So it hit us on two sides. It was painful.
What about you, Jules?
Mistakes that I have made. I think in the beginning, I was really hesitant to go all in on real estate with my career and from a buyer standpoint. And I wish that I'd had more confidence earlier on. I also wish that I had started educating myself as an investor earlier on too. So that's something, obviously not the house hacking, but other ways to invest in real estate and things like that. Um,
Yeah, starting younger. I wish I had
yeah,
started. What about
I
you,
just
Josh?
wish that I had gotten in the market sooner. I wish that my husband and I had these conversations. We couldn't even wrap our heads around like our first $300,000 purchase, which looking back on, I'm like, why was that so hard for us to do? It makes no sense.
Same with
We
us.
say all the time we should have pushed our budget then. But I remember looking at a $320,000 house and we were like, we absolutely cannot afford this. Like we said earlier, maybe $60 a month more. And
Yeah.
we didn't buy it. And if we would have bought that, our return when we went to
No.
sell would have been so much higher than what we did.
It hurts. It hurts.
Yeah.
Because Jacksonville's appreciated so much. I know that hurts probably looking at that original.
We did really well on the one that we bought, let it appreciate, did some minor updates, sold to ultimately put that.
Yeah, you guys. I don't feel badly for you guys because that was a good move.
It was a good move, but it could have been higher had we, been more educated, understood monthly payments and things like that.
But I wasn't raised that way. I wasn't raised to understand like you can buy properties and rent them. Like that just was not a conversation. And no fault of my parents. It just wasn't a thing. Just
a very risk averse household. That's a very different way of spending and saving.
Yeah. Joffrey, what about you?
I would say mine was probably like the second property I purchased. I underestimated like the rehab cost. It was like a cosmetic rehab, but I underestimated. So good lesson, right? So when you get under contract, you want to have your general contractor come out and give an actual quote during the inspection period. I waited till like well after I was closed, and then it came in like $10K higher than what I expected. So that was a big learning lesson for me at the end of the day. That was a $10,000 shock, and I won't do it again.
Did you end up spending the extra $10,000, or did you change your rehab plans?
Changed the rehab plans. Me and Quentin Singleton ended up doing the rehab, and it was awful, right? We were like, I was stationed on the ship. I don't know what he was doing here actually, but it was terrible. We were like eating Wendy's every night. It was awful. We didn't do a good job on the rehab. Yeah, it was just, those floors are actually getting done. We still own the house, right? Those floors are actually getting redone. I believe like today, but it was just a botch of a rehab. It was awful.
Sounds like every one of my rehabs. My contractors are also in rehab.
It's always more expensive than you think. Anything that you're going to do to your house, especially going back to that historic conversation we were having, if you're talking about busting into walls, tearing up floors, I always tell people to be prepared to find something that you weren't planning on, and you're going to have to pay for it.
Yeah, I think one of the first times I met Julianne was in Pensacola after I had just busted through a wall and I was like covered in paint. And I was like, oh, great, I'm going to be this like professional person. I look like like I just walked off the street, and like that was my life for 2 years. I was trying to balance like business meetings with like being covered in paint and all the time. That's the fun part about historic houses, but we should just do a historic house podcast alone. I have a bunch of people we could call for that.
Absolutely. Well, that is it. This is Joffrey, JD, and Jules. signing off.
Thanks.